All right, so we've got the ServiceNow Q3 2024 earnings release. And as expert-level investors, I think we both want to really understand what's going on beneath the surface of these numbers.
Yeah, definitely. There's always more to the story than just the top level numbers.
Exactly. So we've got the press release, of course, with all the details, and we've also got some analysis from SiliconANGLE to see how the market is reacting.
All right.
Should we jump right in? What are your first impressions from the press release?
Well, first of all, they just blew past those earnings estimates.
Oh, yeah.
372 per share versus the expected 345.
Wow.
That's a pretty big difference.
Definitely not a small beat.
No, not at all. And revenue's looking good too. 2.8 billion,
Okay.
beating the estimate of 2.75 billion.
So 22% growth overall.
Yep. And even better, the subscription revenue hit 2.715 billion,
Wow.
up 22.5%.
So ahead of the 2.66 they were aiming for.
Yeah, so financially things are looking pretty good.
Yeah, on the surface, at least, everything seems to be positive.
Definitely strong growth, exceeding expectations on earnings and revenue. But, there's always more to it.
Right, especially when you're looking at it from our perspective as expert investors.
Exactly. And that's where the SiliconANGLE analysis comes in.
Okay, so what do they have to say?
Well, the interesting thing is that even with these great numbers, ServiceNow's stock actually dipped a little bit after the release.
Huh, that's surprising. You'd think such a solid performance would send the stock up.
You'd think so, right? But there's a reason for that.
Okay, I'm all ears.
It seems like some investors were hoping for even more, especially with all the hype around AI these days. Their guidance for Q4 subscription revenue is just a tiny bit above what the street was expecting.
So maybe it wasn't as aggressive as some were hoping for.
Exactly. It seems like some people were disappointed.
It's almost like they're being punished for not exceeding already high expectations.
Yeah, that's a good way to put it. It just shows how well ServiceNow has been doing. They've set such a high standard that even meeting expectations can be seen as a letdown.
It's like, what have you done for me lately, right?
Exactly.
So they've definitely set a high bar for themselves. What else did SiliconANGLE highlight?
They dug a little deeper into the AI side of things,
Okay.
which is a huge focus for ServiceNow right now, and it seems to be paying off.
In what way?
Their Now Assist product is doing amazingly well. It's their fastest growing product ever.
Wow, that's impressive.
They've got 44 customers who are spending over $1 million a year on Now Assist,
Okay.
and 6 of those are spending over $5 million, and 2 are spending over $10 million.
Wow. So those are some serious commitments from customers. What's driving that level of adoption? What makes Now Assist so special?
I think it shows how excited people are about AI agents, which is something ServiceNow is really getting on.
Yeah, it makes sense.
Uh-huh.
Automation is a big deal these days. Freeing up people to focus on more strategic work is really appealing.
Right, and ServiceNow is really leaning into that.
So what else are they doing in the AI space?
They're not just talking about it, they're actually doing it. They just announced Xanadu, their biggest AI release yet, with more than 350 new AI capabilities.
Wow, 350. That's a lot. Can you give us a little taste of what's in there?
Well, they're really integrating AI deeper into their platform tailoring solutions for specific industries and developing those autonomous AI agents that everyone's talking about.
So they're positioning themselves as the go-to AI platform for businesses.
Exactly. They're
Yeah.
making big investments and putting a lot of effort into it. And they just brought in Amit Zavery as their new president, chief product officer, and COO. He comes from Google Cloud.
Okay, that sounds like a major hire. What makes him a good fit for ServiceNow?
Well, he has over 30 years of experience in enterprise technology, and he played a key role in Google Cloud's huge growth over the past few years.
So he knows how to scale a business and drive innovation.
Exactly. And he's known for being really good at packaging and pricing complex solutions,
Right on.
which is going to be crucial as ServiceNow figures out how to price AI, especially as they move away from those traditional per-seat models.
That's a good point. The way we pay for software is definitely changing. So having someone with that experience is really valuable. So we've talked about strong financials, a clear focus on AI, and a strategic new leader. Where does all of this leave ServiceNow in the bigger picture?
It puts them in a fantastic position to keep growing, but of course, no company is immune to challenges, right?
Right. Every company faces headwinds. What are the biggest hurdles for ServiceNow right now?
Well, even with the recent dip, their stock is still up 28% this year.
Wow.
And like we said, their guidance was strong, but maybe not quite as strong as some people were hoping for.
Right.
Managing those expectations is going to be key as they roll out their AI plans.
It's almost like they're a victim of their own success.
Yeah, I think that's part of it.
So we talked a lot about AI, but the press release also mentions this new thing called the Workflow Data Fabric. What is that exactly?
Oh yeah, that's where ServiceNow is really trying to do something new and different. It's basically a data operating system for businesses, a way to manage and use data in a really smart way.
Okay, I'm intrigued.
Yeah.
Tell me more. How does it work?
It connects data from any source, whether it's structured or unstructured, and then it feeds that data directly into automated workflows and those AI agents we were talking about.
So it's like creating a nervous system for a company where data flows to where it needs to go.
Exactly. And there's a key technology within this data fabric called RaptorDB. It's a super fast database that's built for AI-driven companies.
So it seems like they're going all in on this data-driven approach. How much of an impact could this have on their business?
Well, some analysts think this data fabric could actually double their total addressable market.
Wow, that's a game changer.
It is. It puts them in a position to compete with companies like Snowflake and Databricks.
That's a bold move. Are they seeing any early adoption?
Yeah, they are. Companies like Amadeus are already using RaptorDB to speed up their global systems.
That's encouraging. So we've covered a lot of grounds here. Strong earnings, a dip in the stock, despite beating expectations, a big focus on AI, and its fascinating workflow data fabric.
Yeah, it's a lot to take in, but it all paints a picture of a company that's at a really interesting point in its journey.
Absolutely.
They're doing really well. They're riding the wave of AI, and they're pushing the boundaries of what's possible with data-driven workflows. It's a powerful combination.
I'm definitely seeing that elite execution that their CEO keeps talking about.
Right. And it raises a big question. Can they keep this momentum going? Can they really take advantage of this huge opportunity they've created? That's what we'll be exploring as we dig into their earnings call.
There's definitely more to uncover. Let's dive into that next.
You know, one thing that really stood out to me was the strength of their customer base.
Oh, yeah.
They've now got over 2,000 customers who are spending over $1 million a year.
That's a pretty impressive group. What do you think is driving that kind of loyalty and spending?
I think it says a lot about the value that ServiceNow is delivering. Right. And even more interesting is that the number of customers spending $20 million or more a year jumped by almost 40%.
Wow. So not only are they attracting big spenders, but those relationships are growing like crazy.
Exactly. And it's not just about landing those huge deals, it's also about expanding within those accounts.
Right.
They're seeing more products per transaction.
So they're selling that whole integrated platform vision,
Yeah.
not just individual solutions.
Exactly. They said that 18 of their top 20 deals included 7 or more products.
So customers are buying into that whole interconnected approach.
They are. It's a shift from just IT service management to a much broader way of thinking about workflows across the entire enterprise.
That makes sense.
Yeah.
What else caught your attention from the earnings call?
Well, they talked about the stock dip.
Oh, yeah. I was wondering if they would address that.
Yeah, McDermott acknowledged those high expectations and said that they're focused on long-term value.
Well, that's good to hear. Transparency is always important.
Definitely. And he really emphasized their commitment to AI. He called it a generational technology shift that's just getting started.
So they're not shying away from their AI-first strategy, even though the market reacted the way it did.
Not at all. They believe this is the future, and they're putting their money where their mouth is.
What about that new data platform, the Workflow Data Fabric? The one that could double their market.
Right. Well, they gave some more details on how they plan to make money from it.
Okay, how so?
They're rolling out RaptorDB Pro, which is a souped-up version of the standard database.
So it's a way to upsell existing customers.
Yeah.
Makes sense. What kind of improvements are we talking about?
Faster transactions, faster analytics.
Yeah.
They're saying businesses could see a 25% improvement or more in anything they do.
I can see why that would be appealing. Who wouldn't want to be 25% more efficient?
Right. But they're not stopping there. They want to make the workflow data fabric the central hub for all of a company's data. They see it unifying data from everywhere and then using AI to drive productivity and make things run better.
So it's all about AI-powered business transformation.
Exactly. And they're not trying to do it alone.
Oh, yeah.
They talked about partnerships with companies like NVIDIA, Microsoft, Snowflake, even Databricks.
So it's more of an ecosystem play.
Right. They're realizing that collaboration is essential, especially with AI and data management changing so rapidly.
It's like they're focusing on their strengths and then partnering with others to fill in the gaps.
That's a smart strategy.
It is. It strikes me that with all the hype around AI data is really the foundation.
You're absolutely right. Yeah, you can't have AI without data. And ServiceNow is putting themselves in a position to manage that data and then use AI to unlock its potential.
So they're bridging the gap between all the excitement and the actual reality.
Yeah, it's not just about fancy algorithms. It's about having the tools to deal with the data that powers those algorithms. And they're doing it in a way that businesses can understand. They're not just selling technology, they're selling results, things like increased productivity, faster time to market better customer experiences.
Those are things that executives care about.
Exactly. And if ServiceNow can deliver on those promises, they have a huge opportunity.
So what else should we keep in mind as we think about their future?
McDermott talked about how important it is to attract and keep top talent.
Yeah, especially in tech, where competition is so fierce.
Right. Well, it seems like they're doing something right because ServiceNow was ranked as the #1 company for internal advancement by the American Opportunity Index.
That's impressive. It shows that they're not just investing in technology, but also in their people.
You need both to be successful. Seems like ServiceNow gets that.
But here we are. We've got a company that's performing well, exceeding expectations, investing in AI, pushing the boundaries of data and attracting great talent.
Right.
But the stock is trading down. Why?
That's the big question, isn't it?
Yeah, it really is a head scratcher, isn't it? We've gone through all these positives, strong earnings, impressive growth, a strategic move into AI. They're focusing on talent.
Yeah, it's a classic case of market psychology. Sometimes the numbers say one thing, but the investors feel differently.
So how do we explain this? What's making people hesitate even though ServiceNow is doing well?
I think there are a few things happening. First, like we talked about, ServiceNow is kind of a victim of their own success. They've been doing so well for so long that anything less than amazing can make investors nervous.
So even though the guidance was good, maybe it wasn't good enough for people who are used to seeing huge jumps.
Yeah, that's part of it. The market is used to ServiceNow blowing past expectations every quarter. So any sign of slowing down, even if the growth is still strong, can cause some people to sell their stock.
So it's like they're being punished for being consistent.
Exactly. And we also have to think about what's happening in the market overall. There's been some volatility lately, worries about inflation, interest rates, things like that. And that can make investors more cautious. They might pull back from high-growth tech stocks even if the companies are doing well.
So maybe this dip in ServiceNow stock is more about the overall market mood than anything specific to the company.
I think that's right. It's important to separate what's happening with the company itself from what's happening in the market as a whole.
It's like trying to hear a quiet voice in a noisy room.
Exactly. As expert investors, we need to be able to block out the noise and focus on the signal. And in ServiceNow's case, the signal is still very positive. They're a leader in a growing market, they're executing well, and they're making smart investments in AI and data management. All of that points to continued success.
So maybe this dip is a good opportunity for people who are thinking long-term.
It could be. Sometimes the market overreacts, and that creates opportunities for investors who are paying attention. If you believe in ServiceNow's future, this could be a chance to buy the stock at a lower price.
This goes back to what you said earlier about ServiceNow being at a turning point. They're moving from being an IT company to being a broader enterprise platform.
And that's what makes them so interesting to watch. They're not just sitting still. They're innovating, pushing the limits, and reaching further.
That drive is what sets them apart. They're not just riding the wave, they're creating it.
So as we wrap up, here's something to think about. ServiceNow is a company that's doing a lot of things right. They're exceeding expectations, investing in growth, and building a strong foundation for the future. Even though the stock dipped recently, remember that the market doesn't always get it right. I believe ServiceNow has a very bright future.
That's great perspective. Thanks for walking us through this earnings report and for all your insights.
Yeah.
It's always a pleasure to dive deep with you.
The pleasure is all mine. Until next time,